hand over fist trading, then there is something radically wrong with the way you're approaching it. Trading is very, very simple. And I myself, over the past decade, have personally made millions of dollars trading Forex and stocks and crypto combined. And the way that I trade is unique to the way that most people trade and the way that most people teach you to trade here on YouTube. I see so many people doing things that do not matter, and they're doing all these stupid things at the cost of things that really do matter. So here in today's video, I'm going to set things straight for you. Because if you are not continuing to make money consistently, predictably, and profitably over an extended period of time, you are simply a set of decisions, little bits and pieces of information away from making those kinds of decisions that can allow you to make money consistently instead of lose money consistently. And I'm uniquely qualified to tell you this. The reason being is for the past nearly 8 years, I have run a free Telegram channel where I have publicly posted all my wins and losses, my analysis, my trades, my recaps, my outlooks. And just over the course of the past 4 months, calling all these trades live, I've made $356,000 just in Forex alone, discounting swaps and commissions before adding those in. I've generated over $350K in profits. I'm going to give you a link to join this Telegram channel, but what you have to do is you have to click the link in the description below. That's going to take you to my website. You have to put in your name and email. In that, it is a free training course in which I give you a 1 hour long video showing exactly how I trade. And then after you watch that video in the very next module, there's a private link to join this free Telegram channel. There's over 50,000 members in it right now, and it's a great resource for you to learn the way that I trade and then see it applied on a daily basis, something that almost no one in this niche is doing for free. With that being said, what we're actually going to cover here in this video today is we're going to be breaking it down very, very simply. What I'm going to teach you is how to make more money when you're right versus the amount of money that you lose when you're wrong. We're going to go over back testing examples showing you step by step what to do. And then after this video, you'll be able to learn how to effortlessly apply this to your trading today. So without further ado, let's go ahead and get into it. The first thing we're going to talk about is how to make more money trading whenever you're right versus what you lose when you're wrong. And I'm going to show you the simplest, most basic way to set this up. There's basically only one rule in my trading strategy, and that is to buy at clear support zones and sell at clear resistance zones. That is all I do, and I just use a 1-to-1 risk-reward ratio. So here's how to set up a trade, and I'm going to start by showing you a trade that I'm actually in right now. This is a trade that I shared the analysis here in my free Telegram channel. I post it like this. I say, Euro GBP, she is ready, and then I post the analysis here. And then I posted I just called a trade in my Discord group. So the trade currently sits about right here. It's actually a little bit more profit than this now, but this is what it is. So Euro GBP, and I'm going to show you how I structure this trade and how I'm going to manage it. First things first, I buy at support and I sell at resistance on the higher time frames. All you need to do is go to the daily or the weekly time frame, look at where current market price is, and find the most clear support level below price and the most clear resistance level above price. Then set an alert at the support and set an alert at the resistance, and then you just wait. Price is not going to go sideways forever. It'll eventually get to one of the zones, and when it does, here's what you do. In this case, price got here to this resistance zone. This is a resistance zone where price has bounced at on the daily and weekly time frames multiple times in the past as resistance, and then it broke above this zone, came back, bounced as support, broke back below, tested as resistance, bounced, and now we have yet come back up here to this zone again, and I'm thinking that price might drop from here. So here is how to set up the trade so that way you always make more than you lose long term. Whenever price gets into the zone, you enter a sell position. When you're just getting started, just enter immediately. For fuck's sake, trade on a demo account for the first 6 months at least, if not a year, to make sure that you're actually getting profitable in demo before putting real money on the line. This does two things. Number one, it gives you time to learn in a risk-free environment where the only risk you have is your time, but it's not capital at risk because it's a demo account. The second thing it does is it allows you to get that experience while you save up more money to trade with live. So that way, when you're trading live, you can actually have more money to actually leverage your skill set and make more money. We're not here to talk about you making a 20% gain on a $100 account in a year. Nobody wants to trade and make only 20 bucks per year, even if that is the most phenomenal statistical results that you could get. We are here to make money. And in order for you to make money, you have to have a little bit of money to trade with. So, this being said, when price gets into a resistance zone, all I do is I enter a sell if it's at resistance or a buy if it's at support. And in this case, since it's a sell, I just put my stop loss above the resistance zone, and then I put my target at a 1-to-1 risk reward ratio. So this trade looks something like this right now for me, trade that I'm in. So what is going to happen if price continues down further? Well, I'm going to hold the trade, and if it does go to the profit target, I will make $30,000. And I'm going to show you this exact trade that I'm in, showing all the little parameters and everything here in my Discord server. Here in this Discord server, you can see that right here, this is the trade that I called out this morning around 8 a.m. You can see this is my actual entry. That's the stop loss there. I'm risking $30,000 on this trade. And you can see the profit target here is 1-to-1 for a $30,000 potential profit. And again, remember, all we're doing, we're selling at a major clear resistance zone, and we're putting a stop above and then putting a target at 1-to-1, risking whatever it is your risk tolerance is. Maybe that's $100, maybe it's $1,000. You get to decide what you're comfortable risking per trade. And so for this, the stop's above and the target's down below. Now, of course, this has already run into quite a bit of profit, but this is what it looked like the moment I entered. This is the trade right here, Euro GBP. I'm in another one, but that's a separate trade, Euro GBP, and this was the moment that I entered. And this is how I call it out. I say I'm short on Euro GBP. I posted the weekly and the daily charts to show what it looks like, and I've risked $30,000 on this trade. Here's the weekly chart. Look at how clear and obvious this is. It is a clear resistance zone, and if price breaks above, the trade's invalidated and I lose, and if it bounces here, the trade goes into profit and I win. It is that simple. Now, here's where the magic comes in, about how to make more when you're right versus what you lose when you're wrong. If you enter this trade, we're going to go in here to the 1 hour for a little bit more texture and granularity. If this trade starts to win, your job is to hold the trade as long as you can to try to close it at the profit target, okay? To try to let it hit the profit target. If the trade does anything except for that, your job is to manage the trade dynamically. Now, what the fuck does that mean? That means getting out of the trade early if it looks like it's not going to work, okay? So here's what we're going to do. If price starts going sideways here at this zone after you enter, and it goes sideways for generally a couple days, and it's not really having a clear move to the downside, the best case scenario is just to close the trade. Sometimes it will be a profit, sometimes it will be break even, and sometimes it will be a loss. Another outcome is that price starts to bounce a little bit, but then goes back up here into the zone, and then it starts making higher lows and then starts going higher towards the stop loss. In this case, the best decision, if this takes place over the course of a few days, the trade's based on the daily chart, the best case thing that you can do is you can close the trade early before these stop losses hit. Okay, now what this is, this little bit of discretion, this little bit of intuition, this dynamic trade management, by just getting the hell out of losing trades a little bit earlier and holding the winners a little bit longer. This is the key to the edge that creates the profitability. You are getting into trades that have a clear risk structure with simple 1-to-1 risk reward ratios, and then you are managing those trades based on what price starts to do after you enter. Trading is not black and white, and there are no absolutes. However, this is the most black and white way to approach it. If it starts working, hold the damn trade. If it starts going against you, exit a little bit early. That is the simplest way that I can put it, and that is the simplest way that you can approach it. So if it starts going against you, just close the trade here, say halfway to the stop loss. Sometimes it'll be a third of the way. Sometimes it'll be 2/3 of the way. And there are, of course, the times where price is just going to instantly spike to the stop loss. That's what a stop loss is for. Sometimes it's going to be hit. Thank goodness we have stop losses so you don't lose your entire account on one trade. So with this being said, most of the time you'll be able to get out of a trade somewhere between break even and small profit and small loss if the trade's not going to work out. Generally, a lot of trades that don't work out start to go sideways for a little bit, and so you have plenty of time to manage it dynamically. The simple takeaway here, if the trade is not going into profit relatively quickly and relatively easily, it's better to get out of the trade. It's better to keep your money in your pocket than to roll the dice on the coin flip of whether or not price is going to go up or down. If price wants to bounce from the area that you entered, it's generally going to do it very quickly. And if price doesn't feel like bouncing at the arbitrary area that you think it might, then it's probably going to start going against you, and you have to react based on that context, and you can get out of the trade early. This is how I keep my losses smaller than my wins. And this is how you make more money when you're right versus what you lose when you're wrong. This simple way of managing trades by structuring them with 1-to-1 risk-reward ratio, closing early if it looks like it's not going to work, and holding if it starts to work, this is the biggest edge that you can have in your trading. And this is the biggest edge that I have found in trading over the course of the past decade. And it is so unbelievably simple that it blows my fucking mind that more people haven't figured this out yet. I'm teaching you because I'm uniquely qualified to do this, because I've done it for almost a decade, and I've been sharing my trades live publicly for almost 8 years in my free Telegram channel. So with that said, that is how you approach these types of trades to make more when you're right versus what you lose when you're wrong. Now what we're going to do is we're going to go through backtesting examples. I'm going to take you into the backtesting right now. We're going to show you exactly what to do. We're going to go to this website called random.org. We're going to select a random pair between 1 and 20 to pick a random Forex pair that's on my chart. So we've got the number 6. So let's go here to my trading view right here, and we're going to pick the 6th pair. So 1, 2, 3, 4, 5, 6. So this happens to be USD Canadian dollar. So what I'm going to do is I'm going to delete all these drawings here on my chart, and then we're going to click the replay mode, and we're going to go back to somewhere random on the chart. We're going to click random bar. This is back in September of 2020. So this is coming up on 5.5 years ago. So what we're going to do is we're going to look at the current market price first. Then we're going to find the most clear support resistance zone above and below price. So support is always going to be an area below price. What do we have here? The next clear support zone I see is right here. Why? It's because we have a nice clear bounce right here. We have another clear bounce right here. And then right here we had price dip below this zone just a little bit before coming back above, bouncing as support and having this huge pandemic run up. Okay, and then price came back here and then bounced again at that support. Now the next resistance zone is very close here to current market price. Okay, so where exactly is it? We know that price is bouncing here at this resistance zone a little bit, so it's somewhere in there. Then we know it got above it. It looks like it bounced right there as support, and then it bounced here again as support, and then now it's broken below, and it looks like it's come back up into this region. So let's try to get an area that is a little bit more fine-tuned. So it looks like this right here. So this looks like to be the clearest resistance zone. So you'll also notice that right here, price looks like it has just broken above this zone, and now it's coming back to retest. Whenever you're trading, you have to remember you cannot predict where price is going to go. You can only use support resistance as a way to control risk and set things up in a way that when you happen to be right, even if it's only half the time with a 50% win rate, on that 50% of the time that you're right, you just make a little bit more money than you lose long term. Trading is like a business. Your wins are your revenue and your losses are your expenses. Whenever you take the revenue and you subtract the expenses, you want to generally have a little bit of a profit. That is how you make money trading, by treating it like a business instead of treating it like growing a $100 account to $10,000 in a week, which is stupid. So in this case right here, we have a clear support resistance zone. We have price broken above this zone, and now it's come back to touch this zone and retest. So here's how a trade is structured. The idea is that price might bounce here. Now, is there a chance that this zone is not drawn the best and maybe the zone's actually up here and now it's going to bounce and go down? Is it true that the zone might be a little bit lower down here and that's the relevant zone? You never know. You have to draw what is most clear on the chart. And to me right now, this is what is most clear. We do not know the outcome of the next trade, but we do know that the outcome of the next few trades is likely to be profitable if you're making more than you lose. So what we're going to do here is we're going to take a buy. We're going to go and enter a long position. Now, where does the stop loss go? The stop loss does not have to go 10,000 pips below price, and it also doesn't have to go right below the zone. Part of the beauty of using 1-to-1 risk-reward ratios is that you don't have to be a hero. You do not have to try to target the next 1-to-7 risk-to-reward ratio to be able to be profitable, because you're going to have a shit ton of losing streaks, meaning consecutive losses in a row. And whenever you do get a win, you might just break even on all the losses you had, and then you're still sitting there frustrated, wondering why you're not making money. What I do is I drag my stop loss clearly below the zone to give me some room to manage it if I'm wrong. And then if I'm right, I set a profit target at a 1-to-1 risk reward ratio. So in this case, price would have to bounce off this zone and go and make a new high for us to be able to hit the profit target. And that's fine because it looks like the next clear resistance zone is somewhere in here, somewhere around these highs. So this profit target's before that, that's perfectly fine. So now what we're going to do is I'm going to go to the hourly chart so we can watch this a little bit more closely, and then we're going to be able to manage this. Now remember, the entry is just right there as soon as price gets to the zone. As soon as price gets there, you just enter. After you get a little bit more experience, you'll be able to wait whenever price gets to the zone, see if there's any crazy news event or fundamental or economic context that might cause price to break through the zone. And if price is hitting a zone with huge bullish momentum candles and you're trying to sell at resistance, it's probably better to not take the trade. But again, this is stuff that you're going to learn over the next few months, doing this on your own and following my trades and analysis in the free Telegram channel. I have to do the free training at the link in my description. Right now, just enter a buy if it's at support and sell if it's at resistance. You are just trying to get experience. And remember, use the damn demo account when you're doing this for the first 6 months minimum. I promise you, it's the better way to go. Now, we're going to go to the 1 hour chart. And the idea is going to be, I think this hasn't come back here yet on the day, so let's wait for it to go back to this zone there. So there's the entry. So price comes in here. We've entered a buy. And now what we're going to do is we're going to watch what price does. And if price starts to break this zone or starts to go sideways, we're going to get out of the trade. Okay. So let's see. We're going to click it forward hour by hour. So price breaks below the zone. I'm going to hold this trade just a little bit longer because we got that previous low right there. We're going to see what happens. And if it breaks that low, I'm going to exit. So price struggles, kind of goes sideways. It retests there as resistance and it starts to drop. So what I'm going to do is I'm going to choose to exit this trade early right here. Now you'll notice if I risk $20,000 on this and I close about, let's say, a fourth of the way to the stop loss, which is like right here. What this is this is only a $5,000 loss instead of a $20,000 loss. So closing the trade right there represents 1/4 of the stop loss. And remember, if it would have bounced, which half the time it will, then you just hold it to the profit target. So in this case, that is a loss, and we're going to see what would have happened here on the daily chart, right? Because we have to wait for the next trade anyway. So price came back up here into this resistance zone. So a cool thing that we can do now is since price is back up here at this resistance zone, we can say that now that it's broken below this zone, it might be likely to actually pull down lower and then go and fall back to the downside. So what we can do now is we can enter a short position here as soon as it gets to that resistance zone, because remember, this is a pretty clear support resistance zone going all the way back over, since the past year of trading history. And so since price has come back up to this zone, we know that it's either going to go up or it's going to go down. So let's go ahead and enter a short position. We'll enter a short position, remember, as soon as it gets into the zone. So it'll be somewhere about midway into the zone. You don't want to enter after it's already pulled away, but you don't want to be waiting for the best, clearest entries either, because you're going to miss a lot of trades if you try to do that. We're going to put a stop loss clear above this zone, and we're going to keep a target down here at 1-to-1 risk reward ratio. Look how much room we have. We've got all this room here to manage the trade early. And then if we do have a nice winning trade, then it will be a nice, easy profit. So now that this trade has been taken, we're going to go to the 1 hour to watch what happens. Now, if we entered right here and price got into the zone, you'll see that what price is currently doing is it's going sideways right here. So what we have to do is we have to watch it to see if it starts to go into profit or if it starts to break the zone and go up. So it comes down here to the previous low. It looks like it's struggling and going sideways along the low. Let's see if it pops up or goes down. And in this case, it's going into profit for now. Comes back up into the zone. Looks like it's testing it again. So we're going to have to see if it bounces as resistance here or support. You'll notice I did not close the trade as it goes into profit. That is the worst thing that you can do in most cases. Every now and then it's reasonable to close a winning trade a little bit early if it's getting close to the session changeover, or if it's a Friday and the market closes in 2 hours and it's close to the profit target anyway. Sure, there are reasons to close a trade early in profit, and they are dynamic and they are nuanced. However, 90% of the time, the best decision you can do is just to hold a trade if it goes into profit. Now we're going to see if it starts to break above this resistance zone here. So it tries to pop above, comes back. Looks like it failed to bounce there as support first, but we still need to watch it. We need to pay close attention. We're back here to the previous low, so we're going to see if it either breaks this low right here or if it starts going up again. And let's pay real close attention here. So it looks like it did knock out that low, but we need to have a sustained run down to get the rest of the profit target met. And in this case, it does continue down to the profit target. Now, I want you to look at something here. This is a perfect example, even on just a 2-trade data set, which is not enough. We need 50 to 100 trades really to be able to get a good statistical set of data. If you want that statistical set of data, go to my Telegram channel and scroll through the past 4 months of my trading history. You will see I've made $350,000 doing this, and every single trade and analysis and outlook and recap is posted there in that free Telegram channel publicly for you to confirm for yourself. So with that being said, just on this little 2-trade sample set, you can see we only have a 50% win rate. So how the fuck do you make money using a 50% win rate and 1-to-1 risk-reward ratio? You do it by getting the hell out of the losing trades early. If we would have held this trade right here, it would have hit the stop loss because price ended up coming down here. But no, we closed that trade early. We lost 1/4 of the stop loss, which was, in this case, if it was a 20K risk, we lost $5,000. And in this case, we entered a sell, and you'll notice from the place that we entered a sell at, price did not go up anywhere near the stop loss, right? We tested the zone as resistance, we came down, we came back, tested as resistance again, failed to make higher highs up here, and then instead we fell back from the resistance zone into the profit target. I would have closed the trade if prices started to trickle up against the position here, maybe got about halfway to the stop. I would have closed that, and we would have lost another half of a unit of risk, which in this case would have been $10,000, since that's half of the $20,000 total risk. But instead, price went to the profit target, and you'll notice I didn't close it early. I stayed the hell in the trade because it was working. When a trade is working, hold it to the profit target. When it's not, do your best to try to find a good reason to get out. So in this case, this trade wins $20,000. This trade loses $5,000. Pre-commission and pre-swap, that is a $15,000 profit in only 2 trades over the course of September 30th down here to October 8th. That is about 1 week, right? It's a little over 1 week. And that is just on this one pair. Now imagine how many more trading opportunities you have on all 24 Forex major and minor pairs. You have 24 pairs. Even if you only get 1 setup per day, that is 5 trades for the week, okay? Because the trading week is 5 days. Imagine you have 5 trades for the week, and then you only win 2 of them, and the other 3 of them you lose. Sometimes whenever you lose, it'll be break even. So let's say one of those losing trades is a break even, and let's say the other 2 trades are halfway to the stop loss. So 5 trades, 1 of them breaks even, so we don't have to count that. 2 of them are halfway to the stop loss, so that is minus 1 R, right? Because it's minus 0.5 R per each one, so you lose 1 R there. But on the only 2 that win, right? This is only 40% of the trades that win. Each of them hits the 1 R profit target. You get 1 unit of profit on those. So you make 2 units of profit, subtract the 1 unit of loss on those 2 losing trades, and then add in the break even. You have still came out in profit net 1 R. And now imagine if you're risking $1,000 per trade and you took those 5 trades. You had the break even, then you lost 1 unit of profit here, and then you won 2 units of profit on the ones that won. 2 minus the 1 unit of loss, that's 1 unit of profit. You would have made $1,000 for the week profit. And now let's say the next week you only get 5 trades again. And let's say the same stats are true. This is even lower than a 50% win rate. And this is actually closing trades halfway to the stop loss instead of like a third of the way or a fourth of the way. You make another $1,000 the second week. And the third week you make $1,000. And the fourth week you make $1,000. And that's a $4,000 profit for the month, risking $1,000 per trade. Many of my clients who are following my exact trades live in my Discord server are trading with anywhere between $5,000 to $10,000 of capital. And what they do is they risk an amount that's comfortable to them. A lot of them, it's at least $250 risk per trade. Some of them are risking $500 to $1,000 per trade. And I have some clients who have over $100,000 in liquid trading capital in their Forex account that are risking $5,000 to $10,000 per trade. Regardless of how risky that may sound in your opinion, that is what people are doing. If you're risking $10,000 per trade and you come out 1 R per week, that's $40,000 per the month. If we just look at the past 4 months of my trading, that's $350,000 in profit. Let's round it down and let's just say it's like $300,000, right? That's about $75,000 a month profit that I have made just trading Forex. It is unbelievable the way that you can scale this easily. And since you're not scalping the 1 minute time frame or the 10-second time frame, you can risk larger amounts of money because you don't have to worry about swaps, fees, commissions, and spreads anywhere near as much as you do on the lower time frames. Swing trading on the higher time frames using this very, very simple approach is the best way I have found to trade Forex and crypto and stocks over the past decade. And I've proven that in my free Telegram channel over the past nearly 8 years since the summer of 2018. So now what we're going to do is we're going to exit this replay mode since I've showed you a demo. And I'm going to go here to EuroGBP. We're going to scroll back up and we're going to talk about this little last part here. I guess I have to go to the daily to show you this. So the last thing we're going to talk about here is how to effortlessly apply this to your trading today. Here is exactly what you are going to do. You are going to click the link in the description, not right now, but probably in the next minute or two. And then you are going to go to my website. You are going to put in your name and your email, and you are going to click enroll in course for free. You are going to do my free training course. It is a 1 hour long video, and I go into extreme detail, painful detail, about exactly the way that I trade, breaking down the concepts I've shown you in this video. And then after that 1 hour long video, you will click to advance to the next lecture module inside that free training course. And then that is going to give you the link to my free Telegram channel. In that free Telegram channel, you will then follow my trades over the course of the next couple months. And you will begin to be able to simplify your trading and have a risk structure that allows you to control risk and make more money on your winning trades than you lose on your losing trades. And then a small percentage of you who do this going forward and apply yourself over the course of the next 1 to 2 years will be able to become millionaires trading. Trading has completely changed my life. And while I cannot guarantee you anything because trading is risky and most people lose money, and anyone telling you otherwise is intellectually dishonest, I will tell you that you are only a set of decisions away from having every single thing you want in life as a result of trading. Trading changed my life when I found it 10 years ago, and trading can change your life if you know what the fuck to do. I'm telling you right now, as a person who is uniquely qualified to tell you, that trading can be very simple if you just make the set of right decisions. With that being said, I will see you in my free training at the link in the description, and I'll see you in my free Telegram channel. If this video was useful, that's enough for me. I want it to help you. You don't have to like the video. You don't have to comment. You don't have to fucking subscribe to my channel. I just want you to take what you've learned in this video and go apply it on your own. There's no reason for you to wait till tomorrow or next week or next month or next year when you can start doing this today. You can simplify your trading right now. You can start approaching it in a way that is profoundly simple and that allows you to actually make tangible, consistent, predictable progress. Remember, I'll say it for the last time, you are only a set of decisions away from being profitable. Make the right decisions. I'll see you in the next one.